We've got a great story to crow about now. We made it to the other side. We're producing revenues. We are the only pure play tin listed company on AIM with the benefit of byproducts. What's not to be happy about?
Phase two. What is phase two?
Phase two is where dreams come true.
Well, you're going to need to either refinance the whole thing. Do you think you're going to be able to do that? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, do remember to give us a thumbs up at the end, and also leave your comments below. It helps us understand the sorts of questions you want us to be asking, how you think we've done, and of course what you think of the company. And you can also catch this as a podcast or read about it in an article or transcript on cruxinvestor.com. And of course, for Crux Club members, you get early access. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Anthony Viljoen, who's the CEO of AfriTin Mining. They're AIM-listed tin producer now, actually. Their project's in Namibia. It's a kind of vast resource. We try to understand some of the numbers that they've been able to come up with since we last spoke to them in December, around the extraction of clearly the tin, but also tantalite and lithium. He explains that. We talk about the macro environment for tin, because not many people understand the market. So he does a kind of robust and quite detailed explanation of that for us. Lots discussed really around the business model, moving parts, the numbers, and the economics. So take a look in the description below at those. If you click on the number beside that topic, it'll lead you to that part of the video. Otherwise, enjoy what Anthony has to say. Anthony, how are you doing, sir?
Matt, very well, thanks yourself. Good to see you again. Yeah. And good to see the Crux platform gaining a lot of momentum. I've been following it with intrigue since our meeting in December last year.
Indeed, yeah, it was December, wasn't it? And thank you very much for saying so. Yes, I think a lot of people watched that interview with us. But and how are you doing? You're obviously down in South Africa and enjoying the warm weather, are you?
Well, no, it's been incredibly cold, but sort of the coldest weather in a decade. But we've still got a bit of sunshine, and we still locked down, so managed to keep warm.
Crikey, coldest in a decade. Okay, breaking records. Well, it makes me feel better. It makes me feel better that you're not there sitting in 24-degree heat or whatever. Look, why don't we kick off for everyone? Give us that 1-minute elevator pitch, and then we can pick it up from there.
Okay, so what we've managed to do since December, we've obviously got a massive resource, multi-commodity at this stage, and we've done a lot of work in terms of getting the plant up and running, restarting the old mine working operations, and we've been delivering tin. So we're one of the few AIM-listed companies that is actually, or junior mining companies that's actually revenue generating and getting stronger going into post-lockdown.
Okay, thanks for that. And we'll get into a bit of detail around some of what you just talked about as well. But I think first of all, for people, most people don't know tin. Okay, it's not a sexy commodity, Anthony.
That's a matter of opinion, Matt. A matter of opinion.
No, I'm telling you, it's not. So why don't we kick off and give people some sense of the macro? What does the world of tin look like? Who are the big players? Where are the big geographies? And where do you fit in?
So tin's obviously usually associated with your sort of tin cups and tin roofs, and it's sort of always had that connotation. But in modern times, tin is taken on quite a dramatic impact in new technologies, and that's as a result of being a key metal in the development of chips. So all your microchips, your Intel and the Apple and Samsung, all of those electronic companies produce what they call semiconductors, and those semiconductors are your key components in chip manufacturing. So the industrial use of tin is really taken on a new life, and it's having an increasing effect on new technologies. And a lot of that is a reason that historically all of these technologies use a combination of tin and lead as in the semiconductors and in the solder used to put all of your green sort of electronic boards together. But obviously, lead isn't great when you put it to your ear and put it in your pocket. So lead was ultimately banned from these components, and so all of these electronics now use just a pure tin-based product in the electronics. That had a huge impact on reinvigorating the tin market. And the only natural substitute for tin is actually in fact lead because of its specific density. And so with the world market and new technologies being developed, specifically along the lines of your touchscreens, electric batteries, and I'll get into that into a little bit more detail. As I mentioned, all of your computer boards, all of those silver dots on your computer boards, that's all tin. So from a demand perspective, we sort of follow quite closely the semiconductor market. Now, if you see the changes in the consumption of in semiconductors, you'll see that the tin price is very closely correlated with that. And if you take a step back even from there, and if you look what the main driver of the semiconductor market is, it's also very closely correlated to the US economy. And so that's naturally as a result of as the economy increases, so you get an increase in consumer spending, and that consumer spending generally translates into buying new phones, etc., etc. So from a demand side, it's quite there's quite a lot of things, quite a lot of moving parts that are quite interesting. Okay, so what we've seen with this whole sort of trade wars and the move away from relying on supply chains in China, we're seeing that the US is trying to be less dependent on the Chinese supply chains. So we're seeing quite an interesting shift in the world markets, and that's just on the existing technologies. And so the tin market will ultimately follow the semiconductor market as new production capacity opens up. You will see the tin price will tend to follow that. A big draw card also for the tin market now is the implementation of 5G technology. That means that all of the historic chips and what have you that powered the 4G technology will need to be replaced. So we're going to see what we are anticipating is an uptick in demand. So that's on the demand side. So those are the two main factors that we're going to focus on, and you can see that already that's starting to pull through. Then the third element of the demand is the new technologies. So I think we spoke about it a little bit in December. With regard to lithium-ion batteries. So typically, your lithium-ion batteries use a graphite casing that sort of supplies a charge for a certain amount of time. What they're experimenting with at the moment is using tin as a sort of capsule for your lithium-ion batteries. And the tin actually has the effect of doubling your lithium-ion battery charge. So that will have a huge impact, obviously, if that technology kicks into the market, because obviously it makes your lithium-ion batteries more stable and last longer. So demand is looking rosy. Okay, then on the supply side, you don't get big deposits of tin in the world. There are only a sort of a handful. So China is got about 56% of the world's market. You've got Indonesia that's also coming up in terms of probably the second biggest, and then Latin America. The Latin American mines are generally sort of slowing down a little bit. The mines in China and Indonesia are subject to sort of increased environmental sort of regulations as you see it, and then the two outliers, I'll call them, as Myanmar and the DRC. That they've got a large sort of I'd call them artisanal operations. Although our colleagues in Alphamin have just started up their operations, but what you don't get is big deposits of scale, and so what's happened recently is specifically related to COVID, is generally what happens at the beginning of our year, which is sort of towards the end of the Chinese New Year, is there's a restocking of inventory. Now, what happened is that as the Chinese New Year sort of was completed, they were impacted quite severely, obviously, by the coronavirus, and then that had a knock-on effect on all other production. So the Indonesians cut production, the Latin Americans cut production. So from the supply side, you had this kind of drain of supply that would normally be filtering into the market. So you had about 70% of the world tin production literally shutting overnight for a couple of months, when it should have actually been ramping up to meet the increasing inventories of the Chinese consumers at that stage. So the way I see it, and the way the tin price has reacted, I believe, obviously, in the long-term fundamentals, but I see a pinch point coming in the market, where you've had the sort of this delayed demand, delayed supply coming in, and an increase in demand from this new sort of way of where supply chains are going. So, and you can see that in the tin price. So it had an initial sort of quite dramatic fall with the coronavirus, but it out of all the base metals, it was the best performing. Not that it means anything, but it held its value. And that means that there is a base point in my view in the market in terms of what the minimum amount, what the minimum price is per production ton of tin. So I think that we sort of hit the bottom, and we've rebounded quite nicely. And all of our colleagues in the industry, in the International Tin Association, are all quite bullish that that sort of delayed the restocking of inventory will have to kick in at some stage. So we still quietly bullish about when that pinch point will arrive, what levels we'll get to, and hopefully as things open up a little bit more towards the second half of the year, we'll be very well placed. In production, one of the few new tin assets in the world in production, and hopefully in an increasing price environment.
Okay, supply demand thoroughly explained by you. But the question, the kind of bit I want to understand is the size of the market. It's about 350,000 tons a year.
Yes.
You're hoping to, and I know you're doing your pilot plant and you are producing and you've got some revenues, but the main players being China or Asia, they're going to have a say in this, aren't they? Can't they just kind of switch up their production to meet this temporary increase in demand?
Look, there will be an element of that, but the current world market has been in a deficit and remains in a deficit. A lot of where they switch the demand on is not sort of sustainable necessarily in the long term. So you do get, although you are going to get some increase into the market, there's literally not enough kind of, I'll call it industrial scale mining to meet that deficit, and that's where we fill the gap. Is we're bringing back on stream one of the biggest open cast tin mines in the world.
Okay. I'd also like to say, for the first time ever, when we've done a video, the dog barking isn't mine. So needs to be pointed out. It's always my dog.
Yeah.
Always. Okay. What a lot of companies do is they try and map their future success to the growth of the EV battery market, automotive or otherwise, whether it be the lithium ion or other. That's just early stage at the moment, isn't it? There's no, you're not pinning your hopes on the EV revolution changing the fortune of your company, are you?
So and that's the nice thing about a metal like tin, is that its underlying use is a widespread industrial use, basically. So we're not depending or putting our hopes on a future upside. We are supplying into a sort of constrained environment where there is a natural deficit. So we are the battery market is exciting, and it's a definite upside, but we focus on the fundamentals first and foremost. And the upside, when it happens, we just go along for the ride.
Okay, why don't we talk about how things have progressed since we spoke in December? At the time, we were talking about a phase 1 pilot plant and getting that up and running. So, what's been happening in the last 7 months?
Apart from the most bizarre situation ever in.
We'll talk about COVID and so forth, but I'm talking about you as an organisation. Okay.
So look, we've got the plant up and running, our phase 1 plant, and when we call it, we call it a phase 1 pilot project. Okay, so it's not. So our initial pilot plant was a small test plant, but what we wanted to build was something of scale. So that was comparable to the historic operations and provided a hypothesis for a commercial operation, and that's what we've done to date. We've been in a ramp. We were just about in the ramp up phase when we spoke in December, and we were going to start accelerating that. There were a few bottlenecks and optimizations to the plant, and I'll get to that a little bit later. That we were in the process of implementing, and then things shut down literally overnight, and our suppliers shut the factories and what have you, and we couldn't travel backward and forward. But we managed, and there was also a lockdown in Namibia where we had to shut the pit. But we managed to continue operating, and what our view at the time was: look, we've got to do whatever it takes to keep going. In terms of the ramp up, and get to the other side and come out on the other end producing revenues and shipping tin. So where we are, we've achieved the latter. The former, we are still completing a few modifications to the plant, and those modifications will hopefully be completed in the next 2 to 3 months.
So, and is that in the form of a scoping study, or what are you actually doing there?
No. So we actually making adjustments to the plant. So the plant's it's a fully operational plant, and what we're doing is we're looking at areas of debottlenecking. So look, essentially what we've got, and just in terms of the plant itself. I often use the analogy that it's like a Formula One race car. Okay, so So there's two elements to winning a race in a Formula One race car. You've got your engine, and you've got to tweak that engine to get the flow of fuel right, and the maximum performance out of the engine. And then you've got your aerodynamics in terms of how the car reacts going around the circuit. Okay, so what we've got is a gravity-based circuit, which is very much like a Formula One car in terms of mechanics. Okay, so you've got the front end, which is your crashing circuit, and then you've got your concentrating circuit, which is like your aerodynamics. So we've built the plant, okay, and the plant's operating. But now what we're doing is we're making little tweaks in terms of the crashing circuit and the concentrating circuit, so that they're all balanced and stable, and then we can start rushing all through the plant. It's not like a gold plant where you rely on a leaching process, or a chemical plant like vanadium where we rely on also a chemical process and a roasting process. So this is all about gravity and all about moving as many tons as possible through the plant as efficiently as possible.
Okay, so talk to me about some of those numbers. You've been at it, you've been tweaking and perfecting this. So what are the sorts of numbers coming out of this? And the other thing, by the way, you talked last time about tantalum and lithium and so forth. And
yes.
Can you talk to me about how they're factored into what you now know?
Okay, so look, this resource that we identified was a historic resource. So we did a confirmatory drilling program, and we found that the pits contained one of the biggest open cast tin mines currently in the world by inventory in the listed sort of mining space, and we declared that resource based on the historic data. We did some down dip drilling, and as I mentioned in my interview in December, what we've uncovered is an absolute behemoth, because these pits were only 2 out of another 12 different pits that were operated. And then outside of that, within our mining license area, there's still another 180 pegmatites that are potential pits. So so essentially what we've got here is just a huge resource that can be mined for literally hundreds of years, as we go and systematically drill it out. Okay, so what the whole sort of what we wanted to sort of focus on was the throughput of the plant. So the whole key to this is moving as much rock as efficiently as possible through a plant. Okay, and that goes back to my sort of Formula One a car analogy. So we've got a huge amount of rock that needs to be moved as efficiently as possible. So in the pilot plant, we've come up with a nameplate capacity of what we believe we can achieve. And as I said, the two components of that is throughput, the engine, and recoveries, the aerodynamics, call it. Okay. So what we focused on now is getting the throughput of the plant up, and then focusing on the recoveries. And then in addition to that, we've worked out that with a few more tweaks, so at the back end of the circuit, we can increase the throughput. We can increase the recoveries, and also at the front end of the circuit, we can increase the throughput. And what that gives us is a very efficient sort of processor of ore, basically. Okay, and so it's what we're focusing on is debottlenecking those elements, is throughput and recovery, and that will obviously increase our profitability to the extent that phase one could be on itself a standalone project. I mean, some of the numbers we released, would justify this as you know, a standalone sort of listed project, you know, with a pretty healthy IRR and a decent NPV, you know, all the great stuff. And the difference being that it's not on paper or in an Excel spreadsheet; it's actually operational. Okay, so that's on the tin side specifically. Then with the tantalite and the lithium, and I'll make reference to the bulletin boards. You know, the guys had some very pertinent questions, and so with those elements, historically those were never mined. So, and there was not a lot of historical information in terms of obviously, firstly that they existed. That lithium didn't be used back in the 80s, and they didn't really extract the tantalum. So what we've done is we've identified that they exist, and we've declared a resource on that, and we're busy doing a lot of test work on those elements. Now, what we are still working on is once again, you know, what the right extraction method will be for each of those. With the tantalite, for instance, you know, we identified that 10% of every ton is tantalite. So what happens is the tin occurs in a crystal called cassiterite, and that cassiterite is intergrown with another crystal of tantalite, basically. So we're getting good extraction of that sort of crystal conglomeration, and that's all very dense and reporting as a concentrate. Then we've got a magnetic separator that separates the tantalite from the tin, and so we get two different revenue streams. But what we're finding is that some of the liberation of the tantalite is not working as efficiently with the magnetic separator as we'd intended. So the recoveries of that 10% are actually a little lower. So what we're looking to do now is add a little mill at the end to mill down that concentrate into a finer fraction, and that will liberate the tantalite, and then we can run that over a magnetic separator, and that will liberate the tantalite and move our recovery up to sort of closer on 10%. So I think that answers a question on the tantalite. So there is a bit of work that's still that we are just, you know, a little bit of test work in terms of what the right magnetic intensity, you know, the right Gauss is to extract that, and what fraction we have to crush we have to mill the final concentrate down. And then on the lithium side, so the lithium extraction, so essentially what happens is all the heavier minerals, the cassiterite and the tantalite, go towards the concentrate, and all the lighter, the micas and the feldspars go off into the waste. But associated with that is obviously our lithium. So we concurrently to the tantalite, we're also doing some lithium test work in terms of how we can take that waste stream, reprocess that, and produce a petalite concentrate that we'll look to sell initially. But you know, there are options for looking longer term at a lithium carbonate product. So we are doing a lot of work on those. We will be reporting on those results hopefully fairly shortly. Obviously the labs have been closed, so we haven't been able to get the results as quickly as we wanted them, but they are starting to produce the results that we're hoping for, put it that way.
Okay, so look, this sounds very much like a pilot project. You're still, you know, turning knobs and pressing buttons to kind of perfect the process. I get that. And you've answered the tantalite question extremely thoroughly. And it will be a meaningful contributor if you can get it back up to that 10% number, because I think you indicated it would go down to about 5%, right? Lithium. Now I know that's a byproduct as part of the process, but the lithium market's dead and will be for some time, it feels like. So is that a big part of your plans in terms of your spend?
No, so not really. So the incremental cost, I think that we worked out would be about probably an extra 10% in terms of the plant. And that's the nice thing about a multi-commodity plant is that you're not sort of although tin is by far the main one, and what the byproducts initially allow us to do is bring down the C1 costs of tin. So it pushes your effective grade up of tin, so in a very crude way. Okay, but with the lithium, so it is an Li2O product, but it's a petalite, and you get a whole range of different lithium elements. So the petalite concentrate typically will go into your ceramics and your glassware. So it's a very different, very niche market. There's very few producers, I think, in the world at the moment, and there are a couple of off-takers already that have approached us for that petalite, for that concentrate, and it is a low iron spec, which means that it is a saleable concentrate. So that we've identified already. So we're already moving quite far ahead in terms of monetizing that. So the lithium is an exciting upside. I mean, the resource that we've got is significant. I mean, it is one of the biggest hard rock lithium resources in the world. And bear in mind that the cost of extracting lithium from hard rock generally sinks a lot of lithium projects. But because we are sort of, as once again, multi-commodity, it gives us a lot of options in terms of how we market the product going forward.
Okay, talk to me about money. You raised some money in May, 2 million. It's a loan, 10%, 12-month term. Quite expensive. Why did you do it that way?
So look, we've got a lot of really good investors, that have bought into the story at an early stage. A lot of the guys have come across from Bushveld, and which was one of which I was a founder of. So they believe in the story, and they are obviously wanting to avoid dilution, as are we. And so because of the unexpected sort of COVID period, we thought we'd bolster our balance sheets a little bit, and the shareholders have helped us at every step of the way. So it's helped us out. We've got to the other side. We are sort of looking at ways in which we can refinance it. We're speaking to a lot of financing institutions in Namibia that have also been very supportive, I might add, and are continuing their support, and are talking about assisting with the expansion of the plant. So we are looking at different options of that. Obviously, we want to have as little debt as possible and have as clean a balance sheet as possible, and we'll do what's in the best interest of the shareholders on that.
What's your total debt position at the moment then?
So it's about £2 million, and then we've got the we've got a convertible loan note out that's attributable in terms of equity. So it's about £2 million.
Right, but with the convert, that's due what, next year, is it?
Next year, yeah.
And the loan you've just done is also next year. So you're going to need to, well, you're going to need to either refinance the whole thing. Do you think you're going to be able to do that? Do you think that you're going to be advanced enough, revenues are going to be coming in?
Yeah, absolutely. As I said, I believe we're into a new phase in the company. The cash flows, the free cash flows are healthy. As things ramp up and as the tin price increases, I think we'll be in a much better, much healthier position as we go forward. But it's also worth highlighting that some of the guys on the convert side are tin traders, and their view of coming in was not so much to take equity, was more to get a foothold in terms of being exposed to the underlying tin concentrate. So the people that are in this are existing shareholders and traders that are looking to participate more in terms of the longer term access to the offtake.
So you're not at all worried about the convert or the loan? You think you'll be able to deal with that next year?
Yes,
when it's
definitely.
due? Right.
Absolutely, yeah.
Okay, and you said that when the tin price goes up, so you're forecasting tin price going up by the sounds of it.
Yes.
Was that wishful thinking?
Yeah.
What do you know?
Okay, so look, I've told you about the pinch point. So we saw a similar thing with the vanadium market. When you have in these minor metals, it's not like gold. Where you can just source gold from a number of different mines, and the big majors can turn up production. When you get this massive kind of turn off in supply, it creates a gap. Okay, we saw similar occurrence in the vanadium market, although we never anticipated it would be as dramatic. But there's definitely a pinch point developing in the tin market, and it's difficult to explain to people that aren't in the tin market that you can see all the fundamentals building up, and there's not a lot of supply that can make up that deficit. So there is something going to happen. It is already, the fact that it's retained a decent level in its value means that there's already something happening in the background. It's come up. The tin prices performed quite well in recent weeks and continues to do so. So the tin price, I've followed it for the better part of a decade plus. So we've seen these things out. Just as an example, at the end of the global financial crisis, a similar scenario happened where you had and I don't know if it is attributable to the global financial crisis, but there was you had a shut off in supply. The tin price dropped dramatically, and then on the back of that went up to $33,000 a ton. Okay, so it does happen. It has happened in the past. I don't believe anyone can predict commodity prices, but we're pretty confident that there will be an uptick in the price.
Okay, this £2 million loan, £2 million loan. What was it used for? I know it was during the period of COVID. You said it's to get you through to the other side, but has any of it gone into the project, or is it literally just paying salaries?
No. All gone into the project. So basically, to do the debottlenecking. As I said, we were we were slowed down by the suppliers, and so we kind of had like a little gap where we couldn't get anything. So that's gone all into the debottlenecking, and the two main areas of the debottlenecking, and if I can just explain to you a little bit. So what happened is when we started mining, the amount of fine material was a lot higher than what we had initially planned for, and that we don't know yet if that was just because we're going through the weathered zone or whether we're blasting. So we're doing a bit of work around the actual pit at the moment in terms of that fine material. But because we're in a water conscious area, I'll call it, we have to recycle all of our water. So essentially, the back end of the circuit was being clogged up by all this fines material. So we just had to expand the back end of that material, and already it's the grits and the slimes that we basically reprocessing. So we don't have a slimes dam. So we recycle 80% of our water. So that for crudely call it the toilet of the circuit, wasn't working optimally. So we've reconfigured that, and that's been the main work focus over this period, and that's what mostly what that facility's gone into.
Have you been cutting costs during this period?
Yes, yeah, we're very cost conscious. Okay, so and it's the times like these are actually it's quite good from an operator's point of view, because you get to really critically evaluate your cost base quite substantially, and we've put a lot of emphasis on maintaining costs. So this has given us the right sort of period to actually focus on our unit costs, and it's actually starting to really filter through in the operations, and there's a lot more consciousness in the operating crew in terms of managing costs.
Okay, let me just stay on this pilot project component.
Yes.
Okay, how much more new money are you going to need to raise? Any new money to complete this phase one?
We've put an amount of between $20 and $30 million, but that's not to get into nameplate production. Okay, that's basically to push up your throughput and your recoveries, and add in your byproduct streams, specifically your lithium. Okay, so we've stated that in our release, but it's not they're not going to be equity costs. Okay, so that once that project is defined, it will be put into a feasibility study, and we're really into a bankable document, call it, and the benefits of those additions can clearly be translated into direct revenue. So we are speaking already with the banks on that, in terms of financing each of those different components. So but as I mentioned earlier, phase one will be a standalone operation. So it won't affect how we finance the company, and it will be able to generate its own revenues, and make quite a significant impact in those revenues from a free cash flow perspective.
Right, and what's the timing on all of that?
So we're wanting to do that in the next sort of 6 months or so, and obviously the timelines are an issue. They have been an issue. It's not nothing that goes straight according to plan, but and why I say it's an issue, it's because we don't know what's going to happen in the world, what else 2020 can throw at us. But conservatively, it'd probably be 6 months. But if all goes according to plan, it could be 2 to 3 months.
Okay. And so, are you at all concerned about the current lack of ability to recover at the rates that you'd hoped?
No, not at all.
Why?
No, so because it's the whole reason behind not being able to recover was that we just couldn't get flow through the circuit. So because of the back end. So already now we've implemented the grits dewatering part of the circuit, and it's had a massive step change. Once we've completed the slimes part of the circuit, that's not going to be an issue whatsoever. I'm not concerned with that at all.
Okay, you don't talk to the market very much, judging by your website. Why?
Yeah, no. Look, it's been a quiet period, and it's our focus has been on just getting things operating, and I know it frustrates a lot of the guys in the bulletin boards and the retail side of the market, but now the key focus in the last couple of months was just getting through the period, but we're through that now, and we're going to be stepping up quite dramatically our investor relations. Look, we've got a great story to crow about now. We've made it to the other side. We're producing revenues. We are the only pure play tin listed company on AIM with the benefit of byproducts. What's not to be happy about?
What about the VAT rebate? Have you gone on that?
No, so that's all sorted now. So essentially, there was a delay, and there has been a sort of a delay with VAT payments, but what we've got now is so in addition to the government sort of making those payments regularly, we've also got a VAT facility with our local bank. So it works quite nicely. When there is a delay, we can draw down on that facility, and it covers our VAT. So there's no issues anymore with the VAT.
Okay, phase one. You kind of given a sense of the timing there, and you said that's possibly even a standalone project in its own right, based on the numbers that you think will be produced, right? And we'll know more over the coming months because you're going to talk to the market more. Phase two. What is phase two?
Phase two is where dreams come true. So it's So look, I mean, the key thing to every mining company is your resource, okay? And there's very seldom in life do you get an opportunity to mine a resource of this scale, okay? So we need to do this resource justice, and where we are at the moment, okay? So phase one, potentially £100 million NPV. Phase two, we can go as big as we like. Our constraints would probably be we need to upgrade some infrastructure, but from a resource perspective, it's all there. It's very consistent. The grade's consistent. There's multiple different pegmatite bodies that we can start mining on, not only on the V1, V2 pit. So there's but obviously that will take a little bit of work. We've made some hard yards in terms of the studies for phase two. Obviously slowed down a little bit, focusing just on a few things of getting the pilot plant up and running. But we are already engaged with some long-term financiers that want to basically take the whole project forward in terms of financing the whole of phase two. They've been engaged for quite some time now. They obviously following the developments of phase one quite closely, because this is going to be sort of a miniature version of what's going to be the grand scale. So So we are already working quite hard on phase 2. There's the two things are obviously the studies and the financing. So we would want to make sure that we could seamlessly sort of transition into that phase 2 study once we've achieved the objectives that we need to for the long-term financing. And once again, we've mentioned it before, we're very stingy with our equity. We don't want this to be, for the retail guys to think that there's massive dilutions coming along. We've been in the mining game for the better part of 2 decades. We understand that you've got to build value for your shareholders, and that's what we'll look to do when we complete the financing for phase 2 as well.
Anthony, thanks very much. Good run through.
Matt,
enjoyed it.
Yeah, thanks very much. Great to catch up with you again. And as we ramp up our investor relations, we hopefully be speaking more to you. I know you speak to a mate of mine, Brandon Monroe, quite a bit. And just a little anecdote is that his great grandfather actually acquired the Oeste project back in the 1940s. His name was Angus Monroe. So we often talk about why he's in uranium and not in tin. That's
a great anecdote. I'm writing that down. Angus Monroe. There we go. A kilt-wearing Scotsman. Right. Yeah. Okay. Well, thanks again. Do stay in touch. Pick up the phone when there's something interesting to say, and it would be a pleasure to talk to you. Thank you.
Perfect. Thanks, Matt. All the best.